What is going on, guys? I hope you're doing well. Now, in this video, I just want to talk to you about some more examples and show you some more examples of, drop-based rally and rally-based drop setups. Okay, because it's very easy for me to show you in videos and just quickly kind of brush over it. But, if you're not used to seeing it, then, you might be a little bit confused as to exactly what it means. Now, remember, the main thing that we're looking for is we're looking for a move down, and we're looking for it to base out, however big that base may be, and then go in the other direction. Now, this push down in here can be a pullback, but it has to be a decent pullback, because the idea is the more selling pressure there is before we eventually see the up move, that means that there are more sellers in the market for the banks to buy off of. And remember, the banks can't buy and sell anywhere in the market. Okay, the banks need sellers to buy and accumulate from, and they need buyers to sell and distribute to. Okay, and so if we've got a strong amount of sellers in the market, even if it is a strong pullback, and then we change direction, that is going to allow them to pick up a lot more orders than if we have something like this, and this be the pullback here. Okay, because there's going to be mainly buyers in the market, and this is also why trends die, but get weaker the further on that they go, because there are less and less, there's less and less money in the market to continue pushing it in that direction. So I hope that that makes sense. And remember, it just be the reverse on the other side of the coin. Okay, so let's actually go down to the 2 hour here. Okay, and so here, for example, what do we see here? Well, we can see that we're going up here, and then we have this nice bearish move down here. Okay, and then we kind of bottom out here. Okay, and we form this kind of base area here. Now, I personally would draw my base around the top of this doji at the bottom down here to the low. Okay, and we can see we came up and then we came back down. But you might be thinking, okay, well, how do we know that this push up was a suitable place to draw the zone and look at a trade all opportunity? Well, there's a couple of different ways. The first thing that we can do is we can begin looking at how the structure ended up breaking. Okay, and we can see that if we'd had like a little trend line drawn in here, for example, we broke out, we had a nice bullish move compared to this bearish move and this kind of choppiness here. So that's one point. The second point is if we look at the overall movement of the market, we can see that we are going up. Okay, potentially we could have even drawn a fib from the major swing like this, and we can see that it lines up pretty much perfectly with the 618 and the 705. Okay, so those are just two tools that you could use. Okay, you're also welcome to go to the daily. I'm not sure if this will show on the daily, but yeah, we can see on the daily that we have made a new higher high. If we go to the line chart to make this simpler, okay, we have a high here, slightly higher than this previous lower high. Then we break up, creating a higher high, which means we're in an uptrend, okay? And then we retrace, okay? So that's just another tool to your arsenal there, okay? So just keep it really, really simple when identifying these levels, okay? So we can see here, we have a strong down move here, and then we kind of mess around, we bottom out when we create this base. Now, there's two different ways that you can draw this base. You can draw it quite aggressively from these kind of candles over here, and then see this as the leave, and then the comeback, and then the leave. Or you can just be very clear to yourself and simply just draw it around that entire consolidation period from the top of this candle to the low of this candle down here. And we can see that when we did leave, we came back and returned. Okay, if we cut down a time frame here, you can utilize classic trendline breaks here, because again, the trendline is only to help you recognize the displacement and how the movement of price has changed. We can also begin to look to our higher time frames, maybe the 8-hour chart. By the way, if you don't know how to get the 8-hour chart, just go to here where it gives you all the times, scroll down to the bottom, and then you can add any time frame, any hour, any day, any week that you like. Okay, and so on the 8-hour here, we can see that we are kind of ranging, to be honest with you. We're going up and down, but we have faked out near the bottom of the range. And so what does this mean? Well, it means that more than likely, because we are overall, we still look fairly bullish. We haven't been given any indication that we're supposed to be changing bias. We can do it that way. We can also look at the EMA cloud on a time frame like the 8-hour or the daily, perhaps the 4-hour, whatever our higher time frame is, and just have a quick look. And we can see, here it might not have been the cleanest setup because we had this. And again, that's only if the EMA cloud is part of your rules. You know, it might not be part of your rules, and that's absolutely fine. But an example of using the EMA cloud is right here. We can see that we are bearish on our 4 hour. Let's say our 4 hour is a higher time frame. We have this strong bullish move. What does that mean? Well, it means that buyers, the banks can accumulate sell positions. Okay. And so what we can look for, let me just mark this out. I'm not marking anything in particular. We can mark this out and then begin to look for evidence of a change. Okay. So we can see here we have a very strong push phase. Okay, we've come back up above all of these things. Most people will be thinking that this is then a pullback into a new uptrend. Okay, and then simply we would draw our zone around the consolidation. Now, if this consolidation isn't obvious to you, you can cut down a time frame. Okay, so let's just do that here. Okay, now it's not always going to look really, really obvious, but here we just have a little bit of chop going down. And ultimately, you know, if we just looked at this as dojis, then that's absolutely fine. And we can use our 50% body candle indicator to draw this. We may have even missed it if we're drawing it on from these candles here. We can see that we would have missed it coming back to the zone right here, but that's absolutely fine. Okay. You're not going to get all of them. And again, that's if you're waiting for a retrace. If you're just getting in off a candlestick rejection, for example, and that's fine. But again, we're going to talk about entries and stuff later down the line. So let's detect our bias a different way. Let's just use market structure. Now you can use this tool if you would like to. It's the pivot high-low points, and my settings are 10 and 8. 10 left bars, 8 right bars. And so essentially with market structure, what we're doing is we're looking at the last lower high in a downtrend, and we're looking at the last higher low in an uptrend. Okay, and so here we could do two things. We can either look at it from a trend line perspective, or we can simply draw in a line off of our last level like this. Okay. This one, you're going to get a confirmation later with the horizontal line, because if you look here, we don't get notified until here. I mean, it hasn't even broken yet, so not even there, but we get notified first with the trend line. Now, what this means is that the trend line is probably going to give you false signals more often. However, it's going to allow you to get in quicker in some occasions. Okay, but for this example, let's just use the horizontal here and wait and see if we get a break. Okay, so we've seen a break at this point. Okay, now this means that we can switch to a buy bias. Okay, and we can begin looking for setups in our direction. Okay, now this doesn't necessarily mean that this can be the only way that you are detecting your bias. However, I find that the best thing to do is to combine this with, you know, something like an EMA cloud or just kind of just using structure. But again, it depends how advanced you are. Okay, we can see here we have a very bearish move down here. Definitely more bearish than this level down here. We've returned to a consolidation area right here, and then if we look, we're seeing candle rejections just like this. We see it leave, we see it come back a little bit deeper. Then our entry could have been something like that, looking to target the old liquidity, but above this high up here. Okay. Okay, so that's just a lucky example. Not all trades are going to look like this. But yeah, it's just a very, very simple way to detect your bias. Okay, and just remember, if we're going up in an uptrend, we're looking at the last higher low in order to detect our bias with market structure. If we see a break like this, it is the first sign of maybe something changing. Okay, now we can also use a trend line, as I mentioned, and as I've mentioned in other areas of previous courses and videos. That would be your first signal. That would be your second signal. And you can use both or you can use one. It really doesn't matter which one you use as long as you remain consistent with it. Okay. And look, if you prefer reading recent price, there's nothing wrong with that. If you like having 422, for example, okay, let's just look at what that would have looked like. Okay, your trend line would have looked a lot different if you were using a trend line. You would have connected these two dots up here. You would have seen this break up here, come back to the point of origination around these candles here. Let's just show you that. These two candles here, we just circle those. Okay, just like so. Okay, we then leave. We then come back and then we get a very nice entry. So again, it's going to depend on your particular preference, okay, and what you prefer doing. Okay, are you more of an aggressive type of trader, or do you like to be a bit more conservative? And I find a middle ground between this and the previous setting that I showed you is normally a nice thing to do. And again, it also depends on your time frame, because you'll notice that this setting on, you know, a 5-minute chart is going to give you a hell of a lot of noise, a lot of different signals and whatnot. I'm not saying it doesn't work; it can work fantastically, but it's going to give you more noise. Whereas on a 4-hour chart, these lower settings just kind of fit the grain quite nicely, and that just depends on how is based on how those time frames move. Okay, so I hope that makes sense. I hope that I've given you a few. I hope I've given you a few examples here. But the main thing to understand is, once you've marked out displacement, the only thing we're looking for is where did that displacement start from. Okay, so number one is find displacement. Okay, and remember, you can use a trend line. Use a trend line, you can use the cloud, or you can sometimes eyeball it if you are more experienced. Number two, where did the displacement originate? And then we're looking for dojis and consolidation, okay? Because then we're waiting for price to return to that area and give us a potential setup, okay? Very, very simple, guys, because that displacement is going to be a nice demand or supply zone. And we can see, if we just look at this, we have a drop, base, rally. Okay, very, very simple. Okay, so I hope you've enjoyed this. I hope that that's made things a little bit simpler. Just keep it super simple, and yeah, I will make more of these videos in the future. If there are any confusions, if you do have any confusions, just pop them in the premium chat, and we will, and I'll get around to making a video about them. But yeah, thank you for watching, guys. I'll see you in the next one.